Welcome to the Personal Pension Radio Podcast, where it's all about helping you complete your financial journey to retirement. Discover time-tested strategies and get unconventional insights into wealth building and retirement that actually work. Break away from the herd and go for the retirement you dream of. And now, here's your host, the income engineer, Kraig Strom.
Hello and welcome to Personal Pension Radio on video. I'm Kraig Strom. I'm known as the Income Engineer, and this is a continuation of my podcast. If you haven't subscribed or found or discovered my podcast, please check it out on iTunes. There'll be a link in the description below. Now, this episode, I interview a good friend of mine, Pete Tentler. Pete's called the financial locksmith, and he is a reverse mortgage specialist. So if you don't know anything about reverse mortgages, this is great content for you. If you think you know about reverse mortgages, this is good content for you. Now, this episode was originally intended to be filmed in the office, kind of in a studio setting, but thanks to our wonderful Southern California traffic, I ended up being stuck. So I got to record this episode in my truck off the freeway somewhere in Orange County, California. Fantastic how technology works. The audio gets a little bit sketchy here and there, but it's fantastic content. So please enjoy this episode with Pete Tentler, the financial locksmith, and make sure, give me a thumbs up if you like the content. Where's my thumb? Give me a thumbs up, and be sure to subscribe. I really would love to build up my subscriber base on my YouTube channel, and the best way to do that is for you to hit the subscribe button wherever it is on your video player. So again, enjoy the content. Take care.
Starting the recording. All right. Welcome to Personal Pension Radio on video for the first time. I'm here with Pete Tentler. He is the financial locksmith. He's my personal reverse mortgage specialist and one of my favorite people. I thought if I'm going to do a video and is to kick off the video portion of my podcast, I've got to do it with a guy who's got the best voice and face for podcast video, and radio, and the whole way around. So, Pete, welcome to Personal Pension Radio on video.
Dandy introduction. Thank you very much.
Yeah, you love the introduction. And as you can imagine, Personal Pension Radio fans have heard me talk about reverse mortgage over the years, and I'm a big fan. I don't personally do reverse mortgage, but I believe it is a powerful, very powerful part of a retirement income plan. And before we launch into some of the questions and conversation that I have for you, Pete, I'd love to, the audience to get to know you a bit more. Where are you from? How'd you get into this gig? All that.
Sure. Originally born and raised in Chicago, Illinois. Went to Loyola University of Chicago, which just made the Final Four last year, which is pretty exciting.
Made the Final Four last year. Should I ask you how they're doing this year? No?
Well, it's still early. It's not much hope. Loyola is a great school. At graduation, I was fortunate to have 4 job offers. 3 of them meant that I'm going to be staying in Chicago, and I've always wanted to live somewhere warm. So for a company that had offices nationwide. And it was a finance company. Similar to banking, we did home loans, personal loans, car loans. And I went with that company. They bounced me around Chicago, then Houston, then Oklahoma City. And then I got a call out of the blue. This is Thanksgiving of 1994. My old boss from 3 years back called and said, we're starting a new division. It's a reverse mortgage division. Now, brand new, I've never heard of a reverse mortgage before. And long story short, he said, and there's an opening in San Diego. And so never heard of a reverse mortgage before, but what I heard was I'm moving to San Diego. So that was here, and it's all uphill. It's all been great ever since then. So my first reverse mortgage was completed in January.
Oh, that's outstanding.
First completed in January 95. And there was a woman in Point Loma. It's a very nice neighborhood, much older generation, a lot of retired Navy, but beautiful homes and a highly coveted area. She had this home with all this equity in it, and all she had was Social Security as income.
Wow.
And I mean,
I've seen that so many times.
you should have seen her place. It wasn't kept up. Her car was old, had faded paint, 4-ball tires. She was eating mac and cheese and Spam and tuna. That was it. She had nothing, but she had this home that's free and clear. And she says, come over and tell me how this reverse mortgage works, because I want to stay in the home. This was my husband's home. He was a rear admiral in the Navy.
Wow.
He said, please don't ever sell this. So we were able to unlock the equity in her home, give her a line of credit. And she says, I need $15,000 right now, pay off some debt, get her newer car, put about another $6,000 just in the bank as a cushion.
Wow.
Or maybe it was $10,000. And then she elected to draw about $750 a month.
That was a huge change for her. That had to be just a game changer all the way around.
It was a life changer. Yes.
Wow.
It was a huge life changer for her. And I followed up with her about 3 months after the loan had funded. And I called her. I said, Gene, how's it going? She's like, I can't believe I have not had this much money in my bank account in almost 5 years.
Wow.
And I could hear her getting choked up over the phone saying, I was ready to sell this house and rent somewhere. And I know how disheartening that would have been for me, for my late husband. And thank you for doing this for me.
Yeah, that's amazing. I love that. See, now that's exactly what people don't hear. What they hear is, and this happened personally just today, I met with a lady, a nice lady, 78 years young. She's from Texas, but she was here visiting with her grandkids, and her CPA, a super smart guy, said, you probably should talk to my friend Kraig and just, go over some of your questions, because she was struggling with income and her cash flow. She had lost her husband. She's a widow. And it turns out her cash flow is okay if it was just by herself that she had to worry about it. But what she's doing is she's actually subsidizing money to her kids, and a big chunk of it going to a 14-year-old granddaughter who is a sports superstar in a very expensive sport. But her son doesn't have the money to pay for it. So she's been financing it. And she's tight every month, all the time. And I mentioned reverse mortgage. And she said, I don't know about reverse mortgage. I've heard bad things about that. And I said, well, who have you heard that from? And she says, well, my neighbor said. And I said, well, with all due respect, your neighbor doesn't know what she's talking about. And I explained how the reverse mortgage worked for my mom. Right. And folks, if you're new to the podcast, this is the guy who did the reverse mortgage for my mom. And my mom hasn't killed me. And in fact, my mom loves Pete Tentler, loves me, and loves her reverse mortgage because it changed her world. So this nice lady from Texas is actually going to have a conversation with Pete, and Pete didn't even know it until just now. So, Pete, that goes to the question, myth versus reality. Because people think they'll hear one thing about reverse mortgage, and what I have found, and I know you have, is people don't know squat about reverse mortgage, right. And it isn't until they get educated. So what are the myths versus realities that you hear?
Yeah, it's the way you put it. They don't know squat. It's it's true that it's an accurate way of stating, but I try to put it a little more gently for people.
You want to try and put it more gently than I just did? Diplomatic. Oh.
Do you know what that word is?
Yeah.
No, but seriously, it isn't just the senior homeowner that doesn't fully understand it. It is the advice that they're getting from their neighbor, from their hairstylist, from their dentist. Okay. But believe it or not, there are financial advisors, there are legal advisors, tax advisors that don't fully understand it.
No doubt. I agree.
And
totally.
when they don't understand it, sometimes they err on the side of caution and say, steer clear of that. I've heard bad things about it, steer clear of it. Instead of calling a professional advisor like myself and saying, Pete, can you explain this to me in layman's terms? My client's on the phone, or explain it to my client, or explain it to me first. Then we can understand, now that we know the product, is this a right fit for our client or not?
Right.
So getting a little ahead of myself, but the number one myth that I hear from attorneys, and I talk to seasoned attorneys and financial advisors, the whole gambit, excuse me, is I go, explain to me how the reverse mortgage works. They go, well, that's when you sign the house over to the bank pays your check every month, and when you die, the bank gets the house.
Oh, yeah, the bank keeps my house, those evil bankers.
That's the number one misconception. And, sometimes I have fun with them, and I go, look, if that were true, we'd be sending a couple of thugs over there and having your client meet with an accident early so equity in the house. So when I joke about that, but then it dawns on them like, reality is that they don't want us to live very long. The reverse mortgage is the same as a traditional mortgage or forward mortgage in that you always retain title to the home.
Okay, gotcha. Right.
And then when you sell the home or your heirs inherit it and they sell the home, all that equity is kept within the family.
Right.
Okay?
So there's a big one, though, right, is that there'll never be any equity ever. The bank's going to get my house no matter what. Or my kids are going to be left behind with this giant debt they have to pay because I spent all this money.
Yep. That's true. And that's true. That's another myth.
Yeah.
So keep me on your toes.
Yes.
The fact that there will be equity left over as long as housing market continues to rise. And how do I say this politely without them living too long?
Right.
Okay. So again, when the maturity event, that's what we call it in our industry, the loan becomes due when the last borrower finally moves out of the home, whether they sell the home, move in with family, or they pass away.
Right.
Let's say they just pass away. So they took it out at age 62, which is the earliest age eligible.
That's the youngest or the oldest you can be, or the youngest you can be to get one.
You have to be at least 62 years old to get a reverse mortgage.
Got it.
And let's say they live 30 years and they pass away at 92. A good life, long life, great. Home values continue to go up. The balance that they borrowed continues to go up because there's no mortgage payment on a reverse mortgage.
Right.
Now, the balance that they borrowed in the beginning was, let's say, was $200,000. And 30 years later, let's make believe that it's $600,000.
Okay.
Home value is $800,000. The heirs inherit the home. They sell the home for $800,000. The $600,000 is paid off at the close of escrow.
Right.
The heirs keep whatever's left over after closing.
Yeah, the heirs keep the equity. If there's equity, they keep the equity.
Very simply put.
Gotcha.
Now, on the other hand, if the opposite happens, because I know that's what you were going to ask me next.
Yes. The opposite is, I had this with a client that they took a reverse mortgage with mom, right? They got, they asked if they needed a reverse mortgage for their mom. And I said, well, no, but if your mom has a stroke or a long-term care event, you're going to want to have a reverse mortgage so that she could be cared for in her home. So you may want to go ahead and get a reverse mortgage and ahead of time while mom can participate in the process. And that's what they did. Right. And as it turns out, the real estate markets collapsed, just crumbled. And the money that they had out from the reverse mortgage was more than the house was worth anyway. And that's all they did was they just turned the keys back into the bank, and the kids divvied up the money that had come out.
Right. So currently the most popular reverse mortgage is the FHA insured home equity conversion mortgage, or HECM.
HECM.
Which is a non-recourse loan. Non-recourse, as we know, means that the borrower will never owe more than what the current home is worth. So
right.
That 62-year-old takes out $200,000 on day one, and now they live 40 more years. They live to 102.
Right.
Balance is going up and up and up. And we're in the middle of another Southern California housing crash, busting that we've seen so many times.
Yep.
Now they owe $900,000, and the home is only worth $800,000.
Yeah.
What happens then? Nothing. Okay.
Nothing at all.
Non-recourse loan. If they're still alive, they're still living in that home. They're not going to meet with an accident. And when they do pass away and it's underwater, the heirs do one of two things. They either walk away.
Right.
Okay.
Just it.
It's no short sale against them, nothing against their credit. They walk away, or they have the opportunity to still buy that home at 95% of fair market value.
Yes, that's another one that there's a myth there that people think that the bank automatically gets the house. Right. What they don't realize is that the kids, if let's say there's 4 kids, a true story, again, my story, that as it turns out, only one of the 4 kids really wanted mom's house. And she's never been able to qualify for a home purchase on her own. But because all she had to do was get a mortgage to pay off the reverse mortgage on mom's house, right, she was able to do that. Right. I don't know how all that works in the background, but it's not just cut and dry. The bank gets to keep your house.
Right. And keep in mind, the lender, the bank, we're not in the real estate business. We're in the lending business.
Right.
In this case, when it's underwater, FHA is holding the paper. They're holding the mortgage.
Right.
FHA wants, like us, they want nothing to do with real estate. Like, you want this place? We'll give it to you at a 5% discount.
Right. Absolutely.
So at $800,000 home, the heirs can buy that for $760,000 and still not be on the hook for that $900,000 that's owed.
Yeah, and the numbers can be way bigger than that. I've seen them numbers personally with the amount of equity that mom and dad have been able to enjoy in their lifetime being considerably great, and the kids don't inherit the house, but mom and dad got to enjoy the heck out of it. That's what my mom's doing right now. Is she's enjoying her equity thanks to the reverse mortgage, so that she can travel, she can have a nice car, she can take her grandchildren on vacations together, she can pay for dinner, right? My mom loves to be able to whip out her credit card and pay for dinner, and so many seniors cannot do that because they're house rich and cash poor, right? I mean, that's a big deal. Really is. Any other myths that I'm thinking about that I missed?
There's several others.
Yeah, I'm just always curious what maybe a big one that comes to mind. I mean, for me, it's that the bank always gets my house, and they're going to kick me out.
Here's one that I hear often from financial planners and attorneys, that as I'm explaining to them how it works, I'm like, okay, we understand now that it's a safe bet. We understand it's a safe move because there's no mortgage payment required. The bank can't foreclose when there's no mortgage payments missed because there's no mortgage payments required. What they still believe then is they'll say, well, we'll consider this only as a last-ditch effort.
Right.
Resort, when all other efforts have been exhausted. And I explain to them, I go, okay, that's fine. Let's look at it from the credit line standpoint. You have a client that has a home that's free and clear or near free and clear. We set up the equity line of credit, and whatever is remaining available balance on that credit line has a growth feature, meaning that available credit line increases at an annual rate between 5.25% and 6 3/8%.
So wait. Let me make sure that everybody understands this, because I do understand this, and it is a financial strategy that I'm going to tell you right now, listeners, of this show, you got to hear me on this, that this is a financial strategy that is being used by wealthy real estate owners, wealthy people that you think, oh, they don't need a reverse mortgage. Think about what Pete just says. We're going to unlock equity in a piece of real estate that otherwise would sit there untouchable and unusable. We're going to put it in basically a checkbook kind of a situation, Pete. Is that a good way to put it, kind of? Okay. And then we're going to take that amount and we're going to increase it every year by 5%.
Approximately, yeah.
Think about that, folks. To be able to pull equity out of your home and get a almost guaranteed, very conservative growth rate on the equity from your house, whether you use it or not. Is that true, Pete?
Yes.
Wow.
Very true. Now,
I love that. Every time I hear it, I love it more.
The growth rate, the credit line grows independent of the home value.
Oh, okay, right.
Within the myth. The myth within the myth said, oh, that means that you're estimating the home value to increase. No. If the home value goes down, that credit line still increases. So let's make believe you have a client that had a credit line available of, say, $300,000.
Got it.
And the growth rate currently is 5.25%.
Okay.
And that growth rate feature depends on what the current index plus margin will be on the loan.
You mean nerd numbers in the mortgage world?
Yeah, yes. The interest rate.
Yes.
So if the interest rate goes up or goes down, so will the credit line growth rate. So let's make believe that let's use round numbers. Currently today it's around 5.25%.
Right.
Is what it's growing. So it's at 300,000 right now. I've got my financial calculator.
Yep.
In 10 years, that credit line has increased to $500,000.
Jeez, whether the house has gone down or in value or not.
Right. That's right.
That's massive.
Value the home, that credit line still increases. So now think about this. My folks, when they were in their late 80s, they needed full-time in-home care. So that's a lot of money.
Yep, that's expensive.
Especially here in Southern California, it could be as much as $20,000 a month.
Right.
Let's make believe a financial planner is helping with the retirement planning. And they say, once they get this, they recommend a reverse mortgage to their clients and say, just set it aside. Don't borrow on it.
Yep.
Let the credit line increase.
Build up your long-term care pool.
So by the time they're in their mid-80s, let's make believe that's 25 years from now. So that puts a 62-year-old now at 87. 25 years from now.
Right.
25 years from now, that credit line, that $300,000 credit line that started at age 62 is $1.1 million.
That's insane. I love that. And people, again, when you hear someone say an immediate reaction, whether they're a CPA or a financial planner or an attorney or your neighbor, when they immediately say, oh, reverse mortgage is bad, they do not know what they're talking about. Okay. They're just not educated to understand just how deep and valuable this is as a resource.
Right. And the way to relate to them is relate to them as in, well, what is your profession or what was your profession? Well, I was an electrician or I was in construction or I was in insurance sales or whatever it was. Okay.
Right.
When you had a client that needed electrical work, construction work, they relied on you. And if they told you, well, my dentist or my hairstylist said I shouldn't, you're relying on a professional. So
exactly.
When I meet, especially Kraig has referred a lot of clients to me. When I meet with Kraig's clients and I just show them the numbers, I show them how this works. I demonstrate the ups and downs, how it works. Whenever they ask me a financial question such as, well, you've given us 3 options to choose from, Pete. Which one should we choose? Well, I'm not your financial planner. Kraig is. Call Kraig and find out.
Yeah, good point.
Or they say, well, is this taxable income? Well, typically, no, it's not considered taxable income.
That's a big one.
You pay income tax on this. Again, consult with your CPA. legal advice, consult with your attorney. I'm a reverse mortgage professional. I don't do any financial planning. I don't do any legal advice. And that's when I kind of throw it back in their face. Well, if you're hairstylist, right? Yeah. Would you call your hairstylist to come and do your financial planning or your estate planning or fixing?
No, I know that happens so often. I love that. It happens so often. I'll tell you what, Pete, I had someone come to me. They were introduced by an attorney, and we sat down and we talked about just questions about income and financial planning, et cetera, et cetera. And really, it did come back to one of the key components that could work for her was a reverse mortgage. And her immediate reaction was, well, my daughter says that those things are not good. They're not good at all. My daughter's a realtor, and she says that I should never get one. And I said, well, perhaps you'd be interested, right, in having a meeting where we could sit and chat together, invite your daughter. Her daughter's name was Tammy. Invite Tammy to come for a visit. And I went through something that I'm going to ask you for some details on here in just a minute. And you'll love how I'm setting this up, right? Almost like I knew what I was doing, right? So we sat. Now remember, Tammy's a realtor.
Yep.
A realtor. Okay. So we went through and I explained, I said, well, you can do X and Y and Z. And there's this thing called a real estate purchase with a reverse mortgage where you could use a reverse mortgage. And I said to her mom, Angie, I said, Angie, and you could have your kind of ideal retirement home, and you could save extra money in your bank account that you could just spend and enjoy with your grandchildren. And if you know a good realtor, the realtor could help you sell your house and buy the other house. Do you know a good realtor? And Tammy, her daughter, remember the big negative reverse mortgage person, leaned forward and said, you can buy a house with a reverse mortgage? And I said, yes. That she had no idea that you could do that. Pete, you've got to give us some details. Like, how, I mean, people don't know.
That's common. And when I talk to realtors and I say, why would we be interested in a reverse mortgage? I'm like, well, do you know about the reverse mortgage for purchase?
Well, they go, no.
They look at me like I just landed from the planet Pluto or something. Once they actually get their head around the idea.
Right.
Huge light bulb comes on. I mean, you can feel it.
Yes.
You're telling me that empty nester that I have that's reluctant to sell their home because they're lacking the equity. Now I got a solution. So the reverse mortgage for purchase. Again, let's keep this real simple. Consider this just like a traditional mortgage.
Right.
Find a home, like the home, you have a down payment, and you go to the bank to finance the difference. Same rule applies, except on a reverse mortgage, it usually means that you're going to be putting considerably more of a down payment, probably 55%, maybe a little less. Okay.
Right.
Right now, it's
instead of paying cash. Some people go in and they go, oh, we're going to pay cash for the house. Well, there may be a happy medium, right? You don't have to do that.
Yep. And
right?
that's where the reverse mortgage comes in.
Right.
So let's say that they find a home for $500,000 and they've got $500,000 to pay all cash. Great. Buy all cash. Now you have no mortgage payment.
Right.
But now you don't have any money in the bank.
And you have no cash and you have no cash flow.
And depending on their age, so let's make believe that, just to use round numbers, that we're able to finance 60% of the value of the home.
Okay. All right.
So now they have a $500,000 home. We're going to finance $300,000 of that. They put $200,000 down on this $500,000 home. Now they have a loan for $300,000, a mortgage for $300,000.
But they also have $200,000 in equity.
Right.
Because they put cash in.
They put $200,000 down.
Okay.
They got a mortgage for $300,000.
All right.
Now they have $300,000 in the bank. Right. They have $500,000 from the sale of their home.
Got it.
Let's start from the top.
Yep.
They sold the home and they have $500,000 from the sale of the home. they find a new home worth $500,000. They have two choices. They can buy it for all cash and have a mortgage, or they can use a reverse mortgage to finance it. And let's just make believe that it's going to be 50% loan to value.
Okay.
So now they have $500,000 cash. They buy a $500,000 home. They put $250,000 down.
Got it.
They get a reverse mortgage to finance the other half.
Okay.
So they have $250 down, $250 in the bank, a $500,000 home with a $250,000 reverse mortgage.
Okay.
And let's just say the rate on that currently is 4.5%.
All right.
How much is the payment on $250,000 at 4.5%?
Too much education for that.
I'll give you a hint. It's between $2,000 a month and zero.
It's zero.
It's zero.
Totally zero.
Now the client got a win for being able to buy a $500,000 home and not have a mortgage payment. Another win is that they've got $250,000 in the bank.
Exactly.
So they're not
enjoy life.
Cash poor. They're in a nice home that is just the right size for them.
Yes.
They got $250,000 in the bank. The other win is the realtor. The realtor now that
this is a big one. Yeah.
Now that the realtor understands the reverse mortgage for purchase,
right?
They got the borrower to list their home and sell it. And they also got the borrower to buy a home. So that realtor made commission on both ends.
Absolutely.
Win, win, win.
Yeah. And that's what happened with my client, where her daughter was completely anti reverse mortgage. And she ended up helping mom sell one home and buy another and got a twofer. And you know what? She didn't even buy me lunch.
That was a Starbucks card or something.
No, I absolutely love that it is a tool, again, of real estate planning. And I have a number of real estate professionals and folks who listen to this show. And I'm telling you, folks, if you don't know this stuff and you'd like to get in touch with Pete, send me an email to my usual Kraig with a K, Kraig, at kraigstrom.com. It's Kraig at kraigstrom.com. And in your subject line, just put reverse. And if you put reverse in the subject line, I'll just loop Pete right into an email introduction for you. If you want to learn more about reverse mortgage, if you're a professional in this world, real estate, CPA, tax, attorney, wherever you are, or if you're a listener thinking this would be perfect for me and my family or for my mom and dad, send me an email, Kraig at kraigstrom.com, reverse in your subject line so I can see it. I'll make a connection direct to Pete. Pete, I've got to ask you, when you've done this, just like what's the biggest change right now that people need to know about in the reverse mortgage world? If just briefly as we wrap up, and then I want to share kind of my origin story with reverse mortgage, because it wasn't my mom. There is an origin story that where my passion comes from that I go back to, but I know there are always changes in government connected programs. What's up in your world right now that people need to know about?
Last fall, as I said, this is an FHA insured loan. It's governed. It's overseen by HUD, the Department of Housing and Urban Development. They woke up last fall and said there needs to be some changes to the reverse mortgage home equity conversion plan.
Right, and all of their infinite wisdom.
Yeah, so the fees went up fourfold in some areas, and not our fees. This is the mortgage insurance government fee, and the lending limit, the amount that can be borrowed, was lowered. So people that didn't get in before October 2nd, they're seeing in comparison a little bit higher fees. What's happening now is companies like ours are coming up with alternative reverse mortgage plans. They're going to be reverse mortgages.
Gotcha.
They're going to mirror everything about just like the current FHA reverse mortgage, where it's a non-recourse.
Right.
No mortgage payments required. You can do a purchase. You can use it to pay off a big mortgage. It's just going to be a little bit more liberal in the lending guidelines. It's not going to have mortgage insurance fees. There's going to be some options for the borrower.
But it sounds like it really just caused the industry as a whole to get out there and reinvent themselves and be creative and to do things differently, right?
Yeah,
they really did.
That's spot on. That's exactly what happened. And, we've seen this, I've heard these analysts and pundits say, well, we've seen this before in the 90s with subprime, and look what happened then. So I'm much more optimistic than that. What the lenders like our company is putting together, they're going to be much more sound. They're going to be
gotcha.
safer.
I would say I have to agree with you. Yeah, I would agree with you. Just the industry as a whole, and then when you look back, I mean, some of the bad rap on things came from early days, wild west days of these programs, and I get that. That can be said about so many different types of programs. But the key here is that the senior community and this massive demographic shift of baby boomer generation, it is something that it provides a financial avenue that is incredibly important. I mean, just amazingly important. It really is.
It's very important, Craig, because again, sometimes the seniors, their only income is Social Security.
Yeah.
It's not enough. And it shakes me to the core when I go to someone's home and I sit at the kitchen table and I see at the end of the month, they've got $1,200 to their name.
Yeah, no. Even $1,200, Pete, is sometimes quite a stretch, right?
Yes,
it
absolutely.
is. Yeah, my first reverse mortgage conversation was, of course, with someone like yourself. Before I met your fine face and wonderful personality, I actually had met somebody who talked to me about reverse mortgage, and I went, "That's amazing," right? And it wasn't maybe just a month or two later that a client of mine, Eleanor, asked me to meet with her neighbor, Louise, and said, Louise is a widow. She's been alone for nearly 20 years. Her husband had died fairly young, and Louise was 78 years old, so she'd been alone for a long time, a widow for a long time. And Eleanor asked me to meet with her, and so I did. I went to visit. And you talk about $1,200 in the bank? No. Louise had plastic flowers in her flower beds out front because she couldn't afford flowers. But she passionately, when she was younger, she loved to garden. But she couldn't afford flowers and water and potting soil, so she had plastic flowers outside. And when we sat down to visit, her house hadn't been updated or modified or changed since they bought it. And she lived on about $900 a month. And then her kids pitched in a little bit of money. And she basically scraped by every single month, living in the same house that her and her husband had moved into, 1,000 years ago, the way you talked to her. And I went through looking at what I could do to help her. And I said, well, reverse mortgage, and I didn't say it just that way. I said, I really believe this could be something that we should look at for you. And she said, oh, I don't know. I've heard bad things about reverse mortgage. My hairstylist said, literally my hairstylist said, and I said, well, do you think maybe we could get together with your daughter, who she had mentioned was very close to her and is in helps, right?
Right.
And I said, I'd be happy to sit down and chat. Well, her daughter, Deanna, came to visit a few weeks later and sat at the end of the table like this.
I've seen that look.
And just looked at me like I was there to scam her mother. And I said, hey, let me just talk you through it. And I finished by saying, and Louise, when this is all done, we figure you'll have about $150,000 in the bank, because she had a very valuable home and she was older, so her numbers were higher, and maybe about $150,000 in the bank. You'll have an extra $900 a month in income, doubling her current income. And we set aside some money for her to fix her kitchen. And I said, that'll all just happen right away if you're interested. And Louise looked down at the end of the table where her originally very grumpy daughter, Deanna, was sitting. And Deanna leaned forward on the verge of tears and said, Mom, you need to do this right now, like right away. Because the only negative that I could lay out for Deanna was you might inherit less equity from your mom.
Yep.
And she leaned forward and said, Mom, you need to do this right now. And they did. And they got it done. And I got a panicked phone call from Louise about a month after the reverse mortgage was done. She was very frazzled. I thought, oh my gosh, what's happening? She says, there's a deposit in my bank account and I don't know where it's from. And it was about $980, I think it was. And I said, Louise, it's okay. That's the money that will come in from your reverse mortgage every month forever. Go buy the flowers we talked about. And I went back to visit about a month later, and she had flowers planted in the planter. And she lived out the rest of her life in that home, tinkering around with her gardens again and planting flowers. And she passed away, and I got a call from Deanna. It said, Mom died. And I came and I met with Deanna, and I met with her brother. And I said, did she ever do anything to this house except for the flowers? And she said, she bought a new oven, and she cooked us all Thanksgiving dinner in her kitchen for the first time since Dad died. And that was, I'm telling you, I just was amazed, right? This was a lady that would have lived poor for the rest of her life had it not been for the reverse mortgage just completely changing her outlook. And her kids, no kids ever say, no, we don't want you to be happy, Mom and Dad, right?
Yep.
They say yes.
Yeah, and Kraig, we're going to go back. Remember in the beginning, you asked how many people has this been, a game changer from a game changer. I'm like, you know what? When you listen to that story, that's not a game changer. That's a life changer.
Oh, I agree. It's
so happy. She's so proud of her home. She had plastic flowers in there. Now she has real flowers.
Yes.
So happy to be tinkering around and getting her hands dirty. Just to make those flowers look great. Yeah, that's a great feeling. It is, and you've experienced that 100 times, and I love that this is what you do. And folks, I'm going to wrap it up with that. A very passionate story from both Pete and I that, Pete had an experience early on in his reverse mortgage. I had an experience, and I've had them dozens and dozens of times. Pete's probably hundreds of times because this is what he does. What I'm here to tell you, folks, and Pete, he'll chime in with a good yes, man, is reverse mortgage is something that everyone should know about. It's not necessarily right for everyone, but everyone should know about it. And if you would like to know more, remember, send me an email, Kraig@kraigstrom.com. I will connect you directly to Pete. He's a great resource. He can educate you, can research it. If you already have a reverse mortgage, you should definitely have someone like the financial locksmith take a look at it, double check it. You shouldn't just leave a reverse mortgage sit there forever. You should always definitely review it because they are a mortgage after all. They're definitely something you should have checked out. Is that fair to say, Pete? Well said.
Now, outstanding. Folks, thank you for watching, again, the inaugural episode of Personal Pension Radio on YouTube, side by side with Pete Tentler. I think we might do this again, Pete, to dive into more specifics, maybe a little deeper in the future. Folks, remember to subscribe on iTunes. Hit subscribe on my YouTube channel. I got a comment from a listener recently, Pete, that said I don't take care of my YouTube channel. I am going to rectify that. So please hit subscribe on the button below in your YouTube channel. Make sure that you leave comments, give me your feedback, share it, thumbs up, and all that good stuff. I'll talk to you again real soon. Thanks again, Pete.
Thank you for listening to the Personal Pension Radio podcast. We took notes for you, so if you missed any part of the show, you can find a full transcript of each episode at personalpensionradio.com. Be sure to download your free retirement income crisis report at personalpensionradio.com. While you're at it, we would appreciate some iTunes love. Please leave us a fantastic rating on iTunes by going to personalpensionradio.com/iTunes. Thanks again for listening. Now for the disclosure. Information presented is for educational purposes only and is not intended for solicitation, sale or purchase of any security or financial product. Be sure to first consult with a qualified financial advisor and your tax professional before implementing any strategy discussed here. The term personal pension refers to a marketing name designed to educate future retirees and retirees about the economic principles behind creating their own pension-like income. The term personal pension is not intended to be confused with a defined benefit pension plan offered by an employer or by a government entity.